Talk me through this, because at the end of the day, you have to remember, of course, the United States saying that they want to bring that number to zero, but China is a big importer of Iranian crude. And how's that really going to work? Because they've gotten around this in the past.
Morning. Thanks for having me. You're absolutely right. I think there is so many components to this. This is where geopolitics really kicks in, right? So ultimately, it's going to be the level of influence that the U.S. has over each of these markets, and its level of influence over China has been positive. I mean, I think we've seen the way they were engaged on North Korea very positively, but can you really convince them to wind down their relationship to Iran to zero? I'm not sure of that, but the politics of this is probably a little over my head.
And Jahangir, the political uncertainty is coming at a time where there's so much fundamental uncertainty too, particularly on the supply side. So what is your best estimate when it comes to prices? Because given that this market is still rather tight, we've heard estimates from $100 to $60 by the end of the year, depending what your view is on some of these uncertainties.
Yeah, I think fundamentally we believe that this is range bound where it is at the moment in the sort of 70 to 80 mark by virtue of the fact. But of course, the extremes of oil price movement is driven by, one, real supply and demand, two, speculative trade, three, politics, and the one thing that you can never predict is which way politics turns, because that's above most of us, right? And so I suppose in the extreme case, it could go either 60 or 100, and that doesn't really give you an answer. But if things carry the course that it is right now, then I think the range bound 70 to 80 is more logical, because at the end of the day, Saudi Arabia it cannot act unilaterally. It has some ranges for its OPEC commitments. It has Iran and it has others that are partners in OPEC with it, and so. Whilst they want to do what they want to do with alignment to the U.S. and also their own regional objectives, they have to be cognizant of the fact they are part of a broader group, and they cannot be the ones that go and breach the group guidelines, essentially. And so it's not an instant fix.
Talk me through what this means for the GCC markets in particular, because obviously there's been a lot of excitement around what's happening inside Saudi Arabia with this MSCI emerging markets inclusion. And of course, higher oil prices are going to mean good things for a country that's ahead of this Aramco IPO as well. What's your concern when it comes to the Mideast markets? Well,
look, I think this range of $70 to $80 a barrel is significantly better than the feeling and the mood that we had in the region when it hit its lows in the 20s to 30s. So, from a GCC perspective, the oil prices are a very positive backdrop to their own economic financials, and I think we've seen some good numbers from a current account perspective for Kuwait, for the UAE, Saudi economy pickup last quarter was good. So all of that is absolutely positive. What you don't want to see happening is they lose the discipline and the rigor that has come in as a result of the last couple of years of tight oil pricing, and they continue the reform. They continue both the economic reform and the social reforms that are moving them to a far more integrated global economy. So I would love to see the continuation of that reform. So we, from our EMD team, look at that, and in this case, our EMD team is of course get some positive feedback from the Bahrain situation, for example, where strong oil prices may be what helped Bahrain out of its current problems. But again, you wouldn't want to see them not live up to the promises that they're having to make to their richer neighbors to fix the spending issues that they've got.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.